What is happening, crypto champions? Welcome back to Bitcoin Bulletin, your ultimate source for the pulse-pounding world of digital assets. The market is a whirlwind, and if you're not plugged in, you're missing out on the action. Today, we've got a packed show that you absolutely cannot afford to miss. We're diving deep into the critical levels that could define Bitcoin's short-term fate, exploring its surprising role as an inflation hedge amidst economic uncertainty, and uncovering how the legendary four-year cycle is being reshaped in this new institutional era. Plus, we've got a fascinating story about a company turning to Bitcoin to fuel its future. This is the intel you need to stay ahead of the curve. Get ready because the future of finance is unfolding right now, and we've got all the details. Let's get into it. First up, we're analyzing Bitcoin's critical price threshold for short-term stability. What are the key technical indicators and sentiment shifts traders are watching right now to gauge the immediate future of the market? We'll break down the numbers that matter most. Next, we're tackling Bitcoin's role as an inflation hedge. With economic data creating waves of volatility, how is Bitcoin performing when it comes to protecting value against rising prices? We'll look at the latest PCE data and what it means for this narrative. And finally, we're exploring the fascinating intersection of Bitcoin's four-year cycle and the institutional age, examining how this new paradigm is reshaping market dynamics. Plus, we have a compelling case study of a company looking to Bitcoin to power its operations. Don't go anywhere. Make sure you're subscribed and have that notification bell on. Breaking the stalemate, Bitcoin's crucial price level for stability. What if a single price point held the key to Bitcoin's immediate future? In the fast-paced world of digital assets, understanding the critical thresholds that dictate short-term stability is paramount for any serious investor or enthusiast. Bitcoin, ever the center of attention, is currently navigating a complex technical and sentiment landscape that analysts are scrutinizing for clues about its immediate trajectory. This isn't just about watching the price tick up or down. It's about deciphering the underlying forces that could either prop up the market or send it into a tailspin. The current analysis zeroes in on a specific price level, identified through rigorous technical analysis, that is seen as a linchpin for maintaining short-term stability. This level acts as a psychological and technical barrier, with its defense or breach potentially signaling significant shifts in market sentiment and directional bias. Experts are closely monitoring a confluence of factors, including key moving averages, support and resistance zones, and on-chain data, to pinpoint this vital threshold. The sentiment analysis component adds another layer, examining the prevailing mood among traders and investors. Are they leaning towards accumulation or distribution? Are the major players exhibiting confidence or caution? Indicators such as futures market positioning, social media sentiment, and news flow are all being dissected to paint a comprehensive picture of market psychology. A shift in sentiment, either positive or negative, can often precede or amplify price movements, making it a crucial element in predicting short-term stability. The interplay between technical indicators and market sentiment creates a dynamic feedback loop. For instance, if Bitcoin holds a key technical support level, it can bolster positive sentiment, attracting more buyers and reinforcing stability. Conversely, a breach of a critical technical level could trigger negative sentiment, leading to increased selling pressure and further price declines. The current environment suggests that while there are underlying strengths, the market remains sensitive to macroeconomic news and broader risk appetite. Therefore, identifying this precise price threshold is not merely an academic exercise. It's a practical tool for navigating the inherent volatility and making informed decisions in the short term. The ability to maintain this level could signal a period of consolidation and potential upside, while a failure to do so might indicate a period of increased risk and potential downside correction. The community is abuzz with discussions about which specific price point will prove to be the make-or-break level for the coming weeks. But hold on, because the story doesn't end with short-term charts. We're about to see how Bitcoin's perceived value is being tested against a different kind of pressure: inflation. Bitcoin's inflation shield, tested by volatility and economic data. Can Bitcoin truly act as a shield against rising prices in uncertain times. As global economies grapple with persistent inflation and fluctuating economic indicators, the narrative of Bitcoin as a digital gold, an inflation hedge, is once again under the spotlight. This time, the focus is sharpened by the release of crucial economic data, particularly the Personal Consumption Expenditures (PCE) price index, which is a key inflation gauge favored by the Federal Reserve. The market's reaction to this data, and its implications for monetary policy, directly impacts Bitcoin's performance and its perceived role as a store of value. Historically, Bitcoin has been touted as a potential hedge against inflation due to its limited supply, a characteristic that proponents argue makes it inherently resistant to the debasement of fiat currencies. However, its relatively short history and its high volatility have often led to skepticism, with critics pointing out that its price movements are frequently correlated with risk assets rather than acting as a safe haven. The current economic climate presents a complex backdrop for testing this thesis. Rising inflation rates globally have increased the appeal of alternative assets, yet geopolitical uncertainties and central bank tightening cycles introduce significant headwinds. The PCE data, in particular, will be scrutinized for any signs of inflationary pressures easing or intensifying. If inflation remains stubbornly high, it could bolster the case for Bitcoin as an inflation hedge, potentially driving demand. Conversely, if the data suggests inflation is cooling, or if central banks signal a more aggressive stance on rate hikes, it could lead to a risk-off environment where assets like Bitcoin face selling pressure. Analysts are closely examining how Bitcoin behaves in response to these macroeconomic shifts, looking for any decoupling from traditional risk assets. The debate intensifies as market participants try to determine whether Bitcoin's scarcity and decentralized nature are enough to overcome its speculative nature and volatile price action in the face of real-world economic challenges. The community is keenly watching to see if Bitcoin can prove its mettle as a reliable store of value when it matters most, especially as personal finances are increasingly squeezed by the rising cost of living. But what happens when the broader economic cycles meet the deeply ingrained patterns of Bitcoin itself? We're about to explore that. The 4-year cycle meets Wall Street, Bitcoin's institutional evolution. Is Bitcoin's famous cycle ready for a major upgrade in the age of institutional money? For years, the cryptocurrency market has been fascinated by Bitcoin's predictable 4-year cycle, often tied to its halving events, which historically have preceded major bull runs. These cycles, characterized by periods of accumulation, followed by explosive growth and subsequent corrections, have formed the bedrock of many investment strategies. However, the landscape of Bitcoin and digital assets is rapidly evolving, marked by the increasing participation of institutional investors, sophisticated financial products like ETFs, and a more mature regulatory environment. This new era, often termed the institutional age, raises a critical question. How does the established 4-year cycle adapt, or perhaps even transform, within this fundamentally different market structure? The influx of institutional capital brings with it different trading strategies, longer investment horizons, and a greater influence on market dynamics. Unlike the retail-driven cycles of the past, institutional flows can smooth out volatility, alter the magnitude of price swings, and potentially even change the timing or intensity of the cycle's phases. Analysts are now debating whether these cycles will become less pronounced, more predictable, or if they will evolve into something entirely new, driven by different catalysts. The halving events, while still significant, might become one factor among many influencing market direction, rather than the sole determinant. The development of regulated financial products like Bitcoin ETFs could also play a crucial role, providing new avenues for capital deployment and potentially creating more consistent demand throughout the cycle. Furthermore, the increasing adoption of Bitcoin by corporations and its growing integration into the global financial system suggest a maturation process that could reshape how market participants perceive and react to the traditional cycle. The community is actively discussing whether this institutionalization marks the end of Bitcoin's wild, retail-led cycles or the beginning of a more sophisticated, albeit potentially less explosive, evolutionary phase. Understanding this new paradigm is key to navigating Bitcoin's future potential. And speaking of adapting for the future, we've got a fascinating story about a company that's making a bold pivot, and Bitcoin might just be the key. DDC Enterprises' bold pivot. Will Bitcoin rescue its IPO dreams? A company's IPO journey takes a sharp turn, with digital assets now in the driver's seat. DDC Enterprise, a company that initially went public with ambitions in the ready-to-cook meal sector, has undergone a significant transformation, shedding its original identity and pivoting towards a new strategic direction. This dramatic shift has captured the attention of the financial world, particularly given the company's recent financial filings and the speculation surrounding its future capital needs. The narrative surrounding DDC Enterprise has evolved considerably since its initial public offering, IPO, 2 years ago. The capital raised during that IPO was intended to fuel its expansion in the food products industry. However, recent developments suggest a significant divergence from that original plan. Reports indicate that the company has been burning through its IPO capital at an accelerated pace, prompting a reevaluation of its operational strategy and financial outlook. In response to these challenges, DDC Enterprise appears to be exploring alternative avenues for securing the necessary funding to sustain its operations and pursue its new strategic objectives. This is where Bitcoin enters the picture, not just as a speculative asset, but potentially as a strategic financial tool. The specifics of how DDC Enterprise plans to leverage Bitcoin are still emerging, but possibilities range from direct investment in Bitcoin on its balance sheet, to utilizing Bitcoin for operational financing, or even exploring more complex financial instruments tied to the cryptocurrency. Such a move would signify a major departure from traditional corporate finance strategies and would highlight the growing acceptance and utility of digital assets in corporate treasury management. The market is keenly observing how this pivot unfolds, as it could serve as a case study for other companies facing similar capital challenges or seeking to integrate digital assets into their business models. The decision to potentially rely on Bitcoin for financial stability or growth capital is a high-stakes gamble, reflecting both the perceived potential of the cryptocurrency and the urgent need for a financial lifeline. Analysts are weighing the risks and rewards associated with such a bold strategy, considering factors like Bitcoin's volatility, regulatory uncertainties, and the company's ability to manage these new financial complexities. The broader implications for corporate finance and the adoption of digital currencies are significant, as DDC Enterprises' journey could pave the way for future corporate strategies in the evolving digital economy. And that wraps up our deep dive into these incredible stories. But don't go anywhere, we've got a quick recap and your call to action. And that's a wrap on another action-packed Bitcoin bulletin. We've seen Bitcoin's crucial price levels for stability, its role as an inflation hedge tested by PCE data, the evolution of its 4-year cycle in the institutional age, and a company making a bold pivot with Bitcoin. Stay informed, stay invested, and stay ahead of the curve. If you found this valuable, smash that like button, subscribe to Bitcoin Bulletin for all your crypto needs, and ring that notification bell so you're the first to know when we drop new insights. Don't forget to follow us on all social platforms for real-time updates and join the conversation in our community. We'll see you in the next one.